So again today we're going to be basically going through this section much like we did the sections 1 and 2, which is I'm going to just kind of take us through the documents I've compiled, tell you what I think is important, but of course it's up to you to go back through this, highlight data, but most importantly, because again the final that's predominantly based on these sections is open book. You're going to want to know what's in your resource pack. That's really the key to it, is being able to use the resources. So first off, there's 2 Montana departments that we work with for payroll. One is the Department of Revenue, and one is the DOLI. The Department of Revenue deals with state income tax. Okay. The DOLI deals with unemployment. And then this is just sort of a random topic that I didn't know where else to put, so we're going to do it there. Okay. And you have to apply to each of the departments separately. They used to be co-joined, but they aren't anymore. So they're 2 separate programs, different ID numbers, et cetera, et cetera. Those aren't going to go away, are they? Okay, so the first thing is, and again, I'm not going to go through this, it's like 15 pages, but this is what every new employer gets that takes them through how to withhold, deposit, and report state income tax. And it's the same thing that we do with all taxes. First, you got to figure out how much to take from the employee. Then you got to figure out when to deposit them, and then you got to make some report, right, that tells them, hi, what you were supposed to deposit and what you are depositing. You can see here is the table of contents, and again, I'm not going to sit here and read a 15-page pamphlet to you, but it's essentially the same issue that we had with federal income tax, which is you're going to have to use the W-what to figure out how many allowances they have. W-4, right? You guys give me a W-4 if you come to work for me, and I'm going to use that to determine how much to withhold. Number 2A, determine how much to withhold. We also have supplemental wages, right? So we'll take a quick look at that. And then we're going to look at how you deposit, which is part number 3, and what you have to file, which is part number 4. So first off, this is a chart you should be familiar with. It just gives you in one place a snapshot of who you have to withhold on and who you don't have to withhold on. So for example, if you're a corporate officer of a corporation, you've got to withhold on them. But if you've got agricultural laborers, you don't have to withhold on them. So this is just a really good snapshot of who's subject and who's not subject to state income tax withholding. So do you need to memorize this? No. Do you need to know where it is if I ask you some question about some obscure, are cosmetologists, do you have to withhold on them? You're like, I don't know, but you know where the chart is, right? Okay, again, withholding allowances come straight from the W-4. Can you see this, or do I need to blow the type up a little bit more? Oh, you're okay, so you're just following along. Great. Okay. Supplemental wages. Does anybody remember what the flat withholding is for federal income tax? 25%. And for state, it's 6. And I think maybe, did I tell you 3? Okay, it's not 3. Sorry, I did that last year too. They just changed this a couple years ago, and I've obviously not made the change in my mind because I think this is the second semester I've done that. So the supplemental wages, supplemental wage, the SIT on supplemental wages is 6%, not 3%. We used that earlier in the semester, I think, and that's not right. It says right here, flat 6% of the supplemental wage. Okay, now, this is pretty important. Remind me when you file your SS4, which is what is that again? Go ahead. Yeah, to get your FEIN, right? So I file and I get FEIN, and then I'm going to start remitting FICA FIT, right? My 941 tax. The first year as a new employer, how often do I go? Very first year I remit monthly, right? Then what did they do? What does the IRS do after they've got 1 year of history? Anyone remember? Yeah, they tell you then what you're supposed to do in the future. And they tell you that you're either what or what? IRS is going to write you a letter in November and say you're either a monthly or a semi-weekly, right? Except for if you're really big or really small. Okay, Montana does basically the same thing. When you're a new employer, they tell you you're going to follow a monthly remittance schedule. Then, after a year, they're going to send you an announcement or a notice on what you need to be in upcoming years. And they're going to tell you that you're either accelerated or monthly or annual. So they've got really 3 choices, okay? They call an accelerated schedule is exactly what we've been calling semi-weekly for the feds. If you run a paycheck Wednesday through Friday, you have till the next Wednesday. If you run a paycheck Saturday through Tuesday, you have till the next Friday. Okay? And so really that's a pretty big. So if you're accelerated for the feds, you're going to be accelerated for the state, which means you have to deposit your taxes, basically within 2-3 days, right? If you're, average size, you're going to be monthly, which that's going to coordinate with if you're monthly for the IRS. Or if you're really small, they're going to say just do it annually, and you're going to actually pay your taxes, your SIT, when you file your annual return called an MW3. Does anybody remember what an MW3 is from when we did the flow chart? All those returns and where they had to go and transmittals and everything. Anybody remember that guy? Yeah, exactly. So a regular W-3 is a transmittal to the Social Security Agency. MW-3 transmits the W-2s to Montana. So that's basically the deposit schedule. So I would know that that's on whatever page we're on here, 4 or something. So if you want to look up the deposit schedule for SIT, you know where it is. Okay, MW3, as we were just talking about. Montana Annual Wage Withholding Tax Reconciliation Form. That's a mouthful. Basically, it's the cover sheet for W-2s to the Department of Revenue. It's called an MW3. You're saying, oh, wait, I thought you said it was January 31st. Here it says February 28th. If you've gotten your W-2s done and you've gotten everything done, you're going to put them all in the mail by January 31st. I mean, technically, 2/28 is the date. But with Social Security Agency, you've got to have them in the mail by 1/31, so of course you're just going to do that here too. You're not going to hold on to them. Okay. So, back once again to this topic with the state and the feds. You guys all worked for me. Actually, this is an interesting case. This was in the early days of Microsoft, like 92, maybe 91, maybe even late 80s. They had 30 or 40 coders working for them that they had categorized as independent. And the coders sued them when they went public because if they'd been employees, they would have gotten stock options, which is worth a hell of a lot more than a $50,000 a year salary. If you were in on the early days with Microsoft, it would have made you a millionaire. So they sued Microsoft. They were recategorized as employees. They were given the stock, and they are in fact millionaires. But what could the employees do besides being reclassified? They could, sue Microsoft. And so this is a problem for employers that have misclassified. So about that time, a little later than that, but it doesn't matter, the IRS came up with something called Section 530 relief. And what that means is, as an employer, if you've got people that file wage claims against you and say, hey, you haven't been treating me correctly, rather than essentially being penalized to the point where I have to shut down, I can apply for 530 relief. 530 relief means that all I have to do is comply in the future. There's no prior ramifications, okay? But I can only apply for it if I show that I had a reasonable basis for treating you as independents. And that's based on a significant segment of your industry did that. I relied on the advice of my attorney or my accountant. Everybody else does it like this in my trucking industry or the software industry, whatever. Something that you can document and prove you had a reasonable basis for doing it. And just saying, like, I didn't want to process payroll isn't a reasonable basis, right? Substantive consistency, that means if you did it for one person, if I treated one coder as independent, I treated all my coders as independent, right? Substantive consistency, and I did what I was supposed to. In other words, I 1099'd you. So if I can prove those three things, I can apply for Section 530 relief, and I'm not penalized for prior withholdings, back taxes, anything like that. In other words, it's going to probably keep me from being put out of business. I use the fuzzy side. Okay, and this is just the rest of that Montana. I don't know why that's in the middle of this. That's not really where this belongs, but so probably note to self, if I ask about Section 530 relief, that's supposed to be up with the independent contractor stuff. I don't know why it's floating in the middle here, so that's kind of weird. So you might make a note to yourself of that. Okay, so let's go through the steps. So I'm an employer. I'm either starting a new business, I bought a business, or somebody like me who's a sole proprietor and just by myself, and now I decide to hire a couple employees and scale up my business. Okay, so I'm an existing business that for the first time has employees. So, and I'm going to run payroll, so I need to get W-4s from you and do everything appropriately. What's the first thing I'm going to do in that situation? I've got to do what? Apply for an FEIN, step number one. That's going to get you set up with the feds. Step number two, for Montana, I've got to apply to be an agent for withholding tax. Okay. Step number three, I have to apply with the Department of Labor and Industry to do SUTA. Administer SUTA. And step number four, I have to apply with state fund for workers' comp. I would tell you, I certainly don't do it anymore, but it's really 4 pieces of paper. It's not even pieces of paper anymore, most of it's electronic. But people will pay you $200, $300, $400 to do that for them to get their business set up. I mean, it takes less than an hour. You can do it. You really do it by yourself. No, I'm scared that I'm going to screw something up. Like, okay, I'll cash your check and do it, but I can tell you it takes less than an hour. So this is all it is. You fill out the FEIN, you fill out this form I'm going to go through. You apply for your SUTA rating, and you get workers' comp policy. Those are the 4 things you have to do to get set up. It's not rocket science. It's filling in little blanks. And they all have instructions, and they have helplines. And So if you start a business or go to work for somebody, please feel empowered to do it. It's not, there's nothing scary. There's no police that are going to come take you away if you don't do it right. So to get set up with SIT, the first thing you have to do is just fill out this form, and you can see federal ID number. Well, I didn't get that. I just applied for it, so just write applied for, you know. Address, type of company, am I a corp, a partnership, an LLC? Why am I doing this? Because I started a new business or I bought an existing business. And then this is the names of the partners or the principals. And then here's all the instructions. And this is where you send it to or you fax it, and then you're going to get back. And SEIN, State Employer Identification Number, which is different from your FEIN, your Federal Employer Identification Number. So now you're going to have two numbers, right? And you're going to actually get a third number from the Department of Labor and Industry. Okay, so that's the first thing you do. So now you've got your SEIN. Now, your people start to work for you, and you need to withhold state income tax on them. Here's your tables. Obviously, you should be able to find these pretty easily because you'll need them. They work exactly like the federal tables do, except for you don't have different tables for married versus single. Because in Montana, you can, even if you're married or with a domestic partner, you can still file separately on the same tax return. Okay? And I will just tell you that's almost always beneficial. I do a ton of amendments for people because they file jointly for the Fed, so they assume they have to file jointly for the state, and you don't. And it's almost never to your benefit to file jointly for the state, unless one person doesn't have much income. Why? Because if you've got two people making $30,000, at $60,000 they're in the 5% bracket. At $30,000 each, they're in the 3% bracket. Right? So when you merge income, it puts you into a higher marginal tax rate versus if you split it up. And so, like I said, like if you make 90 and I make 5, you know, it's not going to be worth your trouble. But it's definitely worth the trouble to do if you're roughly equal income generators. So let's everyone see where these tables are, because I'm going to give you some examples and have you use them now. Okay, so all you look at is, so the first one's weekly, the second one's, you know, bi-weekly, the third one's semi-monthly, blah, 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 same thing that we're used to, and the fourth one's monthly. Up here is the number of allowances on your W-4. And then here's your wages, okay? So I'm going to give you a couple examples and ask you to find the SIT withholding for me. So the first one, let's say, her W-4 says single with 4, and she's paid bi-weekly. Okay, so we got two people, Sarah and Eamon. Sarah earns $39 a year. She's single with 4. She's paid bi-weekly, and I want you to use the charts and calculate her SIT. Eamon earns $130 a year. He puts 4% of his gross earnings into his 401k. He's married with 2. Calculate his SIT. So I'll give you 4 or 5 minutes to do that. Oh, thank you. Yeah, that's kind of important. Semi-monthly. And so for those of you that are listening online, you should also go ahead and do this so that you know how to use the charts. And then we'll go over it in a few minutes, so there's going to be some dead screen time. What did you do with the 401k? Huh? Go ahead. Yeah, you've got to subtract it because you don't pay income tax on it. Do you pay FICA on it? You do. You only get out from underneath income tax. So, how many times a year are you paid if you're paid bi-weekly? 26 indeed. And semi-monthly? But how many times a year? 24. 24, yep. So that's your gross, but you have to subtract 4% of that rate because that's what he puts into his. Into his 401k. So this is what I find the taxes on, right? So let's see. Bi-weekly 4 and $1,500. Bi-weekly 4. So I'm going to go across here at least $1,500, but not more than $1,600. Did you get 59? At least 1,500. No, that's at least 1,400, but less than 15. That's what it says at the top. At least, but less than. Right? So you got to go to the one. What did we just say that was? 59? Okay, and this guy's 5,200 semi-monthly and 2. Okay, so I'm going down here, I'm going down here, I'm going down here. 288. Yeah? Yep. All right, last example. So Rochelle earns $210,000 a year. What's an HSA? Health savings account, right? Works a lot like an IRA to pay your copay on high deductible health care plan. And she funds that $5,000 a year, which I believe is the max. She's paid monthly and married with 2. So let's figure out her set. HSAs, no FIT, no SIP. But you still have to pay FICA, right? Where do I get that? She's got $5 grand a year that she puts into her HSA, and she's paid monthly, so that's how much she doesn't have to pay state or federal income tax on. So when you go to the tables, you're obviously going to find that she's so high income, or high income enough, that what? Got to do a calculation, don't you? Oh no, what am I doing? I don't know where I got that. Oh, I think I took it from the last person's wages. 17,083. Does that make more sense? So those are taxable wages for SIT purposes, right? Monthly with 2. So I go down. You see that once you get to 11 grand, you can't just pull the nice, neat number off, can you? You have to go down and do this. And they tell you her income tax equals $610 plus 6.6% of the amount over 11,000. Right? 6 because she had 2 withholding. 610. So I'm just taking what they told us and putting it in an algebraic formula. $610 plus 6.6% of the excess over 11 grand. Yep. Equals times 0.066 equals plus 610, $1,011.50. And that's all there is to it. You will for sure, on the final, be expected to run a couple full payrolls for people. Calculating FICA, calculating FIT, now you know how to calculate SIT. Okay? So obviously you have to know which things do you not have to pay FIT and SIT on, which things do you not have to pay anything on, what's the only thing that you have to pay no taxes on? Only one, flex. Flex is the only thing you get out from underneath all taxes. Good. So that's the withholding tables. Piece of cake, right? So now we've been through step number 1, registering. Step number 2, figuring out how to withhold. Step number 3 is depositing. Okay, remind me again, if I'm a brand new employer, how often am I depositing SIT my first year? Monthly. So right now we're on April, I don't know, what, 20th? When, if I ran payroll today, when would it be due? My SIT, huh? May 15th, 15th of the next month, right? So then, say I'm a pretty good sized business, in November, I'm going to get a letter from the Montana Department of Revenue that says now you're going to be semi-weekly. So then fast forward, pretend we're on next year. And I'm running payroll today on April 20th, which is what day are we on? Thursday. When would I have to have my deposit in by? If I was on an accelerated schedule. Next what? Next what? Wednesday. Pay between a Wednesday and a Friday, you have till the next Wednesday. Okay. How do I deposit? That's what this is telling me. You can either do it the old-fashioned way, which is mailing a voucher or a coupon. We're going to take a look at those. Or what most people do anymore is you do an EFT, which is an electronic fund transmission, where they just take it right out of your account and deposit it in the Department of Revenue. How many of you used electronic funds for your deposit or your refund for your income taxes this year? Anybody? Yeah, it comes about 3 weeks earlier than a hard copy check. I actually owed this year, so they just zap it right from my account. You know, and it's just easier than worrying about having, you know, a big check floating around out there. So that's really basically what people do. You know, most folks are doing here anyways. But you can still mail checks. Okay, and here's the voucher. And you do need to know what this is. It's called an MW1, and this is one of the things you're going to have to do for your second assignment is fill out an MW1 to make a deposit. All they want to know is it's going to come pre-printed with your SEIN, the state ID number. You fill in the FEIN. You fill in the period ending date. You fill in, this is pre-printed, your SEIN, and then how much you're paying. And then I wrote down here, you use this to make a SIT deposit. Then, at the end of the year, you fill out an MW3, and you attach all of your W-2s to it, and you do a reconciliation of your SIT for the year. And that's this last step right here, annual report. You don't do any quarterly reporting to the state, only annually. And it tells you we can only accept the Montana MW3, not the federal one. Okay. And then all W-2s must be attached with the MW3. That's really the important stuff. Okay, and what does that look like? Piece of cake. One-page form. I guess hopefully this is getting redundant enough where you see that most of these things are just following instructions. Well, okay, these are the instructions themselves. And then this is actually the return. So here's the name of the company, the address, blah, blah, blah. What's an amended return mean? If I check that box, what would that mean? Yeah, something else. I screwed up the one I've already filed, so please throw that one away and use this instead. Number of W-2s, that's how many are you attaching? No? Got 8 employees. And their paper, that is not handy at all, but those check marks don't go with the form. Then you basically just tell them how much this is gross income. It's got a match box. I don't know off the top of my head. I think it's like box 13 on the W-2 as your state wages. But it's going to be the same as box 2. Federal wages and state wages are the same thing. How much income tax did you withhold all year from your people? How much of that have you deposited? It should equal out to 0. In other words, everything I withheld, I've deposited unless you're an annual filer. In other words, you're really small. You know, I withheld $632 all year, and I haven't deposited any because they told me that I'm just an annual depositor. So now I'm putting this $632 in here with this. But if you're a good-sized organization, you know, then you will have deposited it during the year. This should be, you know, 0, right? Because you sent it all in during the year. And then the only other thing to do on the bottom, they want to make sure that you did them on time, is you have to go date by date and tell them, you know, so here's when the deposit date ended, and here's when I actually submitted the payment. How much did I withhold? How much did I pay? So they make sure that you did it on a timely basis, because even if you got all your deposits in, if you didn't do it on time, you're still going to get a penalty. So that's all there is to that. And that will also be required for part of assignment number 2. So an MW1 and MW3 Okay, so moving along. Now we're on the second organization, which is the Department of Labor and Industry, who administers SUTA, right? State Unemployment. And again, these steps are going to start to look pretty familiar. Step number 1, register, get a number. Step number 2, for SUTA, you do a quarterly report and you give them the money you owe them every quarter. Okay, does SUTA come from the employee's paychecks or from the employer's checks or operating funds? From the employer, right? I think in Pennsylvania on the project we did, the employees put in a little bit of SUTA too. And that's unfortunate that they use that for an example because I think there's only 2 or 3 states that do that. In Montana, we don't do that. It all comes from the employer. Okay? And it's called a Form UI-5. This is from the DOLI website, doli.montana.gov. And these are the 2016 rates and wage base. Now, we have not really talked about how SUTA works in Montana because I kept saying we're going to talk about that when we get to the Montana section. So this is where we're really going to dial in and learn about the SUTA program in the state of Montana. So the first thing is that I want to tell you is that it's just like any other insurance fund. Okay, it's a big chunk of money that sits there and is utilized to pay claims as they come due. So this is obviously is 2016 numbers because they couldn't get 2017 numbers in time to post for this. But at the point that whatever the snapshot in time was, I think 12/31/16, there was $320 million in our trust fund, right, that employers have paid in. And as a percentage of total covered wages. So you can see what the ratio is. When you get that ratio, you don't get that ratio, the actuaries get that ratio, then it tells you which of the 11 schedules will be posted. Let's stick with me here because it's a little bit complicated. So you don't need to know all these numbers, but here's what you need to know. Is that once a year, the Department of Labor and Industry goes in, they do these ratios, which basically says what's our wages in Montana and how much do we have in the trust fund. In other words, how flush are we, or how dodgy are things looking, right? And then based on that ratio, there's one schedule posted, 1 through 11, and everybody falls somewhere on that ratio, on that schedule. Each employer does. And based on that schedule that's posted that year, and your individual company, that's how your SUTA rate is determined. So, can you see right now which rate schedule we're under? Is it a heavily taxed schedule or a lightly taxed schedule? Huh? Yeah, you can see your SUTA rates under this schedule. You know, if you're a class 7 under this rate schedule, your SUTA rate isn't even 1 percentage point. It's 0.82. But if you're graded a class 7, which I'll explain in a second, and things are not looking good, and we've got a 10 schedule posted, your SUTA rate's going to be 2.62%, right? So really what this is telling you is right now, Montana's basically in full employment, right? We got a ton of money, and we're pretty flush, and so they're not going to be taxing employers very harshly right now because there's no need to. Now, so does everybody understand the first thing that happens is the state publishes what's the formal name of this? Schedule of contribution rates. And in that schedule of contribution rates, you need to know 2 things. One is, are you a deficit employer or a surplus employer? And the second thing is, what rate class are you in? Okay? eligible employer is the same thing as a surplus employer. And that means that when they went back and looked in the last year, that you paid in more taxes than you paid out benefits. So you're a surplus. It's like if you get a good rating on your credit. Right? So they're not going to ask for much money from you because you don't have much turnover. You don't have any claims, right? However, and just kind of take a snapshot of this. So say like you're in class 7, like I said, 0.82, you're not even paying 1%. Versus, what if you're a deficit employer? That means last year that they had to pay out more on employees that claimed against your account than you paid in for taxes. So in other words, you've got pretty high turnover, or something's going on, you have massive layoffs, something happened. So look at how much bigger these numbers are if you're a deficit employer. That's why when you manage a business, like if somebody leaves your company and you fired them, and then they go and claim unemployment and you're not on top of the game and you actually let them, the benefits end up getting claimed on your account, it's going to cost you in lots of ways because possibly then in the next year you're going to be a deficit employer, right? You guys are looking at me like I'm talking in Greek. You understand what I'm saying? Can somebody regurgitate what I just said? So this is what I get all the time. Where did my number come from? Where did my SUTA rate come from? My friend who owns an architect firm, her rate's 1.2%. Why is mine 4%? Go ahead. She's probably a deficit employer. What was your comment? Yeah, she's probably a deficit employer. She's maybe a newer employer that doesn't have as much history, right? But all employers in Montana are on the same schedule, okay? The rate class is a combination of how long you've been an employer and how big your wage base is. So if you've got like 1 year of history, you're still, you're higher risk. Versus, I've had an engineering firm with same three employees for 15 years. I am going to be in the absolute best rate class because I've got a lot of history, probably got pretty high income people, and low risk.
So basically right now Montana is 1.
Yes, and in 2015 we were on rate schedule 3.
So we're at 1, and then all that changes is whether the employer is
Deficit, yeah.
deficit or surplus.
Yeah. And then which rate class you're in.
Class
Yeah.
of employer they are.
Yeah.
So you don't have to worry about 2 through
Nope.
11.
And in 2015 we were rate schedule 3, and that's all you had to worry about. When we were in the heart of the recession, we were in like schedule 8 or 9, right? Because there wasn't very many wages being reported and there was a lot of claims. The adjustment to schedule run results in rates decreasing by about 26% between 2015 and 2016. I honestly don't know which rate schedule we're on for 2017. It's going to probably be 1 or 2, real low, really low. Okay. So an eligible or surplus employer, 3 years, I think I said 1, it's 3, of contributions paid exceed the benefits charged to their account. So they're making money for the state, so to speak, like any insurance pool does. So you guys have all, I'm sure, well, maybe you haven't, but had experiences with car insurance where you go like 10 years without an accident. And then, like in my case, I'm a really good cautious driver, but I had 2 teenage boys in the house at one point in time. And then, like, they're getting in, dings every other second, and you lose all your good ratings, and you pay these top-notch premiums, and then it takes like another good 6 or 7 years to even get back down. It's crazy. That's exactly how this works. You've got a history of never having any really turnover, and then say you've got massive layoffs. You lose your biggest account or something, that's going to be there for a while to haunt you. And the deficit, exactly opposite. You have more paid out than you paid in. Okay, and what's the name of the people that do all this assessment? They're called? An actuary, and we don't have an actuarial science degree in Montana. You have to go to Washington for it, but you have to get a PhD in it, and it's in statistical modeling. And really the only place actuaries go to work for is insurance companies. Pretty exciting. Makes accountants look downright giddy. Okay. Then I'm going to show you in a second what a unemployment report looks like. You have this, so say your SUTA rate is 3.6, right, percent. Everybody gets tacked on this weird little thing called an administrative fund tax, and that's what is that, 1.8. So then that makes my total SUTA rate 3.78. For our purposes, you're not going to differentiate between those. You don't care. You just have to pay now 3.78. And what's the wage base? The wage base is the amount that you pay SUTA on per person per year, right? And I think we looked like in the project we just did with Pennsylvania, isn't their wage base like 8,500? 95. Ours is 30,500. This is one of the things that employers bitch about in the state, that we've got a non-competitive wage base for SUTA, right? So you're looking to relocate employees here, and you're doing the math, right? You're saying, oh crap, that's a lot. That's a high wage base. Okay, here's how you register. Montana Unemployment Insurance Registration Form. Again, nothing rocket science in here. You got to tell them what kind of organization you are. You've got to identify the owners by social security number and name. Really, the important thing here is this guy. What do I do? What's my business? And it tells you, description of business type and activity in Montana. This section must be completed in detail to accurately determine your business activity for proper assignment of contribution rates. Be specific and check all that apply. So out of the chute, the first year when they give you a SUTA rate, you don't have any history. They don't know if you're going to be a deficit or an eligible employer. So they're just going to assign you a rate based on the average from whatever it is you do. So say I'm going to be in software, computer sales and servicing. So I'm going to come under here, and I'm going to do some retail, and I'm going to do some services. And I'm going to, sell computers, sales. And I think that that's going to be about 40% of my income. And I think about the other 60% is going to be servicing computers, right? And I'm planning on hiring 3 people, and I think I'm going to have 1 person on the floor and 2 people servicing. That's how they're going to assign me my rate out of the chute. They're going to look at the history of computer sales and services and do all that actuarial analysis and say you're coming out of the chute at a 4.3% rate. And then the same 3 people are there after a year. It's going to go down after 2 years. It's going to go down even further. After 3 years, I'm going to officially be established as a surplus employer. And that is all I'm going to say about that. So you send that in, and they will send you a rate. How often do I have to file that? Anyone remember? Quarterly. They're going to send me this return. It's going to have the name of my company, address, blah, blah, blah. And it's going to tell me my rate, 3.0. It's going to have that little administrative fund rate. Okay. Are we using the 2017 rate or the 2016 rate? what number did I put on that table in the very first piece? Was that 30,500? It was 31.4. Okay, that's the 2017 number then. That's what I've got it. This is always confusing because we're in transition. But when I make these PDFs, I don't have access to the 2017 forms yet, so I have to use the 2016 and pencil over them. Okay. So basically that's not what's important. I mean, that is important, and I'll show you this on the assignment, what wage base to use. But what's important is down here. This is where you fill out and tell me who your employees are. Okay, so say I've got 5 employees. And I'm going to put some data up on the smartboard, and then we're going to use that to bring it into here, because this is the third thing you need to do for assignment 2 is fill out one of these. Total wages paid this quarter, and excess wages this quarter. That means, and we did this for name of our company, Globright or whatever. How much of this quarter's wages went over the annual wage base? What's the annual wage base? 31.4. Okay, let's go try 4 people. So I guess on your paper, because obviously you don't have a form, do what I just did. Gross wages and excess wages. Okay? So write that down. We're going to fill it in. I'm going to give you the data down here, and then we're going to go fill it back in. What do you want to know in order to complete those 2 numbers? How much and how often and what else? Which quarter you're in, certainly. How are you going to do that last column of numbers? What are you missing? What do you need? Excess wages this quarter. What do you need to know? Yeah, total wages for the quarter for sure, but also,
Where we are.
huh?
Where we are.
Yeah, where are we in the year? How much have they earned before today? So they're all paid monthly. So these guys are all paid monthly, let's see. Okay. So you've done this already. I'm going to, take you through the first person. Where did that go? How much did the first person make in the fourth quarter? Did you get this data down? How much did the first person make in the fourth quarter? $6,000, right? 2,000 times 3 months and a quarter. How much of that 6,000 was over 31.4? None. Go ahead and complete the chart. Wow. Right, so when you take the 10.5 from this quarter and add it to the 27,000 he's already made, how much over 31.4 does that throw for the year? So, isn't it 3,500 times 3? Oh, much of C's quarterly wages exceed 31.4 for the year? All of it. I hate that. I don't know why it does that over there. That's that. And this guy, oops. Where am I? Yeah, 3,200. And I made 24. 3,200 times 3 on 9,600. So then I take 9,600 plus 24,000, and I get 33,600. And I'm like, oh, they went over, right? How much did they go over? 33,600 minus 31,400. 2,200. Yep. So total up your quarterly gross, total up your excess wages, and then we'll go finish the form. Everyone get that? So basically, on this form, oops, I should put it all the way up. What was my rate here again? Go check that. So I'm using 3.18%. Okay? And for the assignment, which I'm going to go to right as soon as we're done with this, it'll have the rate on it. Okay, so I'm using 3.18%, so just remember that. Now we're going to go down and we're going to fill out the bottom. And obviously, up in here was what we just did. So we got, to help me out again, 44.1 and 26.3. So if you were looking at those two numbers, how much are they going to pay SUTA based on? Sorry. No, because 26,300 of that's over the wage base. The difference, right? I paid 44.1. Total wages paid this quarter, line 1. 44.1. Line 2, UI excess wages, 26.3. Line 3, UI taxable wages, the difference between the two numbers. Line 4, what's your rate? Multiply those numbers together. Total tax. No credits, no adjustments. Write a check for $566.04. I'm not late. There's no penalties. $566.04. And fill out how many employees you had per month. Okay? And mail it with the check by the the last day of the month following the close of the quarter. Same as 941. Okay? So right now, as accountants are getting done with tax season, people that do payroll are now going through all the first quarter payroll returns, aren't they? Those are all due by April 30th. Okay, you guys feel pretty comfortable with this? So I'm really going to have a very short recording. I think I've got maybe 10 minutes left to say. With that, let's turn now and take a look at your assignment. The one is due when Nina picks it up the day of the audit test. The other one is due on the day that I get back. Boy, those really don't go away, do they? So go ahead, let's go to assignment number 2, and can you take a couple minutes and read that, please? Kind of skim it. We've got about 8 minutes here. So for those of you listening online, assignment 2 due on April 27th, assignment 3 due on May 2nd. Assignment number 3 is extra credit, so it's not required. So somebody give me a synopsis of what we're looking at. What's the important things here? God bless. Okay, what's the big issues here? Yeah, okay, now, what is an MW1 again? It is, it's to make your deposits persist. How often do these guys deposit? Yep, they're accelerated. How are you going to calculate how much they're depositing? Can you just go get one big number? No, you've got to go look up on the tables the SIT for every single person. And then add them up. And that's how much SIP for one payroll, right? Secondly, but let's jump down to number 3. Sorry, let's stick with SIP before we go to student. So first you need to do that. They don't have any 401k or HSAs. It's pretty straightforward. I tell you how much they make per pay period, right? I tell you what their W-4 says. You know how to use the tables. That's all I got to say about that. How many times are they paid in the 3rd quarter? They're bi-weekly, right? So how many times are they paid? Says 7. I give you the 1st quarter, the 2nd quarter, and the 4th quarter. You're going to fill in the 3rd quarter and do the MW3, which is an annual report, right? Don't forget, when you're converting to a quarter, you got to take everything for one payroll and multiply it by 7 to gross it up to a quarter. And then lastly, you're going to do the UI5, which is what we just practiced for unemployment. And I tell you, I give you exactly the information we just talked about. What's the prior year-to-date wages? In other words, how much have they made before today? And then you can figure out how much you're making this quarter, because I tell you how much they make each pay period. You know, there's 7 pay periods in the quarter. So you're going to go through and do what we just did. The forms are right here. Here's the MW1. So you'll just print that and fill it out manually. Here's the MW3. Print that out and fill it out manually. And you can see that I told you you don't need to do all the day-to-day reconciliations because that's busy work. And here, as promised, I gave you the rate and the cap. So just print those out and fill them out. That's due on Thursday, next Thursday. Questions? Assignment number 3. This is going to be based on the lecture that I'm going to, I guess, sit here right now and take. Okay. It says, in the Department of Revenue departmental DOLI section, which is section number 3 that we've just been looking at, you'll find a series of letters from FARA Philly to the DOLI, and I'll show you those in just a second. What I want you to do is respond to FARA on behalf of the UI division. In other words, you're an employee for unemployment insurance. FARA is writing you some letters. You're going to only pick one of them. And you're going to respond to her using the materials from the lecture I'm going to tape and post. You need to clarify any misunderstandings, explain any issues. This is a letter. You have a return address. You have a date line. You know, look up. It's not the same as the memo you wrote for today. Okay? Memo and letter do not have the same format. Don't forget an introduction and a concluding paragraph, and this is up to 10 points extra credit.
Can you just pick one of the letters?
Pick one of the letters. I'm going to show you the letters. We got about another 1 minute here for me to do that. The letters are in the section that we were just on. Okay? On here now. We go back here. So the letters are in the DOLI and DOR site, or link. That was still open. And they are all the way at the end, I believe. Here they are. They start on page, whatever that is, 37. I did not write these. I'm not this clever. Yo, buckaroos. Blah, blah, blah. Okay. So there's 4 of these, and at the bottom I've penciled in on them, you know, extra credit number 3. So you choose that letter, or this letter, or this letter, howdy partner, or Yahoo. Now, if you choose the last one, number 4, there's a potential charge notice on the next page that goes with it. A potential charge notice is something the unemployment insurance office sends an employer when someone's claimed against them. That says, hey, McKenna just filed claims against your company. And if you don't do anything in 10 days, they get the money regardless of what the situation was. So as an employer, you're stealing from me and I fire you and you claim unemployment. If I don't answer that letter in 10 days, tough luck for me. Okay. All right, so I will finish that lecture right now. It'll be posted by tomorrow. Oh, just make it now. Okay. take it now. You've got the return address, you've got on the unemployment website, and or I think you've got it here. Here's the return address. And then I think Farafilly, oh, here's Farafilly's from Giddy Up, Lowell, Montana. Somebody's got too much time on their hands at the DOLI. This is like a workshop I went to. Anyways, so do that for extra credit. When I see you then next, we've only got 1 week of class left, which is the section 4, right? Okay, happy week. 2 is due on 4/27. Assignment number 3 is due on May 2nd.